Okay, hi guys. So this is going to be part two of the series of time manipulation. And it's not going to be so much of a teaching, but more of a perspective of how I look at time and price and how I project these um, components together to give me my targets. And this helps me to determine how long I should stay in a trade, how long it should take for my setup to form, and where are logical areas that I can use to take partials, right? And in the event that the trade is not moving in the direction or with the speed I expect, how can I get quick confirmation that I'm either on the wrong side of the move or there is more manipulation to be expected, right? So on Telegram, I shared a picture some time ago of a multiplication table. We have the numbers 1 to 9 going vertically and horizontally. And then wherever they overlap in the middle becomes the product of the two numbers. So since we're using a scale of time and price, it's essentially going to be the same thing. And that's how I interpret it. So if I wanted to find the price at November the 8th, 10 o'clock, I would run a line, a vertical line, for example, like here, wherever that is, which is GMT, I think +3. So I wanted to find the price at this time. I run a line here, and then I'd put a line here. So that would give me time and price. So the time would be here and the price would be there. So if I'm projecting based on my studies a particular range of time in the future, I'm going to be looking at how long does it take for a move to play out and how far should it go, right? So if this was my starting point, for argument's sake, and I wanted to project 5 hours in the future. So let's say typically my trades take 5 hours to play out, and I want to project them 5 hours in the future. And this is an hourly chart, so I'd get a line and I just count 5. Well, 5 would have been here. Let's use a larger number for perspective. Let's say my trades take 55 hours to play out. So this is an hourly line which measures 55 hours, all right? And let's say my target is below this low. So from where I am now, price could go, I'm just gonna measure up from that. That's about 50 pips. So let's say that's my target price. And this is my target time, right? So the overlap is going to be that area right here, where time and price meets. So if I enter here, I'm looking to exit either at this price or below it based on how the market is moving. If it starts here and just drops immediately, that's perfect. It's within my window of time that I allot for my trade to play out, so that's good. If it gets to this point and price is not yet there, then something is likely off in my trade and I am going to close that trade, all right? That's simple. Rules keep us in check. But the important thing when you're doing trading like this is to identify where do you start from. That's important. So let's take off some of these lines. So on different brokers, the day starts differently. If you're an ICT student, then you would understand that he largely believes that we should start our days at midnight open, right? So this chart shows you the normal time on my broker, which is, again, GMT +3, I believe. So this is where the start of the day is. So if I'm doing any kind of projection using my broker's feed, I just start here. But luckily, MT4 provides the opportunity to use many different indicators that you can use to manipulate this data. And you can find period separators almost anywhere. And that would help you to redefine your range of time. And that's what we have here. So if you look closely, let's just cycle between these two charts. On my broker, this is where the day starts. When I'm looking specifically right here, where these dotted lines are, the period separators. This is where my broker starts, right? But as an ICT student, I don't look at the start of the day from right here. I look at it from here because this is New York opening from my broker's perspective. If I was to match the time. So you can do this simply by, if you know what New York midnight time is in your local time, you open your broker and then you mark that candle, and then going forward, you just pay attention to that specific candle at that specific time and you mark it out. If you're fortunate to have indicators that can do all this for you, then you can get a chart that looks like this. This is what a weekly chart looks like for me. This is the start of midnight on Monday. This is the start of New York on Friday. All right, not midnight New York, but the New York session on Friday morning. So I like this range specifically because I don't really like trading on Fridays. So that's why I stopped my line there. You could go here and put your line to the full week, that's fine. But that's where I stop it. Now, with this in mind, or trading like this, what I do is the period of time or the range before Monday midnight is Asian session. So I have a template that does this for me. It highlights the Asian range before Monday. And I can use this little bit of price to do a lot of things, right? For example, let's say that at the start of this week, which is the red line, I was bearish, but naturally you're not going to just start selling at the start of the week. You're going to look back for your reference points, your order blocks, stuff like that, where you're going to be looking to get in. So just randomly, if we're looking for price to sell off from here, because that's the last order block, and that's that impulse swing down, and we have the Asian range, then we know that we could project the Asian range higher to find deviations that line up with the order blocks, and then we find our targets, right? So instead of selling here and then suffering through all this drawdown, we could wait, project the Asian range, find your targets, or we'll find your entries rather, and then this becomes your target, because this is where liquidity would have been resting from the previous week. So this idea is where it started for me, and I went beyond this to implement some principles that I want to say I discovered them, but hey, yeah, which is largely around the idea that 3.5 deviations of specific ranges of time gives me insane precision. So I like to use a 30-minute chart for this. So here's a 30-minute chart. Here's that Asian range, all right? If I will believe that this Asian range is going to be projected 3.5 deviations lower, I'm gonna grab my rectangle tool. I'm gonna put a line around all that. Right here, and then I'm gonna clone this. So that's 1, 2, 3. And then 5, I'm just gonna take this and then center it right there. And then that's my 3.5. So this becomes my target. So if I tag right there, hold down the shift on MT4 and pull it over, that's my price target that I'll be looking for. Now, this is one thing. Knowing where the draw on liquidity is in this sense is one thing, but how long do you stay in a trade like this? When do you enter? All that good stuff. Now, we all have different rules to frame that idea. What I'm going to show you now is an idea that I use a lot. So I want to know how long it took this move to play out, all right? So from start of midnight to the candle that closed below, which is here, I want that range of time. I don't need to mark it out or know it, I just need to have it identified and highlighted. Then I want this range of price. So to not give myself more work and then duplicate all of this again, I could just take this entire range like this, and that becomes 3.5 deviations. So once I have that, I'm going to take this box now and put it right there. 3.5 deviations. So this is going to be my new target. And let me put that right there. That's my new target. All right. All of this is hinged on the fact that you believe that price is going to be bearish. If you did not believe that price was bearish, then we'd have done different things. Mainly just identify where the new drawn liquidity is. All right. So if this becomes my new target, what time of day did this play out? Well, if this is Asian and this would have been New York open, this is sometime in the end of New York session. All right. This again is midnight New York the next day. Asian, well, no, this would have been Asian. London, New York session is right here. So if I'm trading New York session on a Tuesday, New York session starts 1400 hours on this broker. So I'm just going to find that candle right there. So this now becomes my time to look for entries. New York open. How long do I expect for this move to play out? This range of time. So if I clone this, I'm going to put it right at the start of New York. So at the end of this box is where the move should play out. All right. So I have my time when I should get my take profit. And that's my take profit price. So if I overlap these two areas right there, doesn't matter where you put it. What's important is that you have the price level and the time level. And that's what we have here. Take profit hit. Now price hits that and then pulls away aggressively. Look at this candle. The body is all the way up here. The wick is all the way down here. There's no way you can convince me that this is a real move when the body is this far away. There's no volume in this. So price has been extending down 2 days. If this is a retracement, how far up do you expect the retracement to go? Just looking at bear structure, we have these highs and all of that, but we don't guess. So we're going to use this range of time. We're going to anchor it not on the wick, but on the bodies right here. Right here. So now my new price target to the upside becomes this. All right. I'm going to be aiming for that. But how do you enter for a move like this? And of course, you can look at confluences from structure. How do you enter a move like this? Well, this is the last down candle that was here. We're not bullish until price closes above it. All right. Again, ICT, consecutive down close candles. We didn't close above them until we did here. But then because of this idea here, this is not a close above this high. So this is not a break of structure. So if you move your focus to when did this high get price closing above it, we see that happening here in Asian session. All right. Asian session does it, then it retraces. This retracement is now down in the order block. This is midnight New York. So now we have our price target, the confirmed break of structure. So now we need to project when to enter. because this happened before midnight New York, we could start our projections from midnight New York. So again, I'm gonna take this time window, project it from midnight right there. So at the end of this time window, I should get my take profit. All right. Just anchor a vertical line right there. Pull this price over. Take the line off now so you can appreciate it. So we have there. Perfect. All right. So this video, again, is going to be entitled Defining Your Blocks of Time. We have your block of time that you project in the future, or how long you expect your move to play out. Then you have your range of price, where they coincide or they overlap is your target. Time meets price here. Time meets price here. Time meets price here. I do hope that this was helpful. Please study it. Forex trading is risky. Manage your money. Thank you for watching.